You are listening to chartingwealth.com for Wednesday, the 31st of August, 2016. We're going to jump right into the market. What do we see with IYY, which is a total market index fund? In other words, it tracks the whole stock market. What do we see going on here? Well, it crossed over going down back on the 22nd of August. We didn't see the derivative oscillator flip over until the 26th. That day, well, that two-day candle, we had a huge down move on that candle. The market had really been slipping sideways since about the 16th of August. Maybe you could even call all the way back to the 12th of August, but we saw major down movement there around the 26th. We actually had an interesting divergence. We had the MACD rollover, that's the moving average convergence divergence indicator rollover, crossing over the signal line, but we had the market go up over a 4-day period, the two-day candle ending on the 22nd and the 24th. Then we had the big plunge on the 26th. Well, we have the newest candles been completed on the 30th of August. That is the Monday and Tuesday movement of the market. And what do we see there? Well, it's pretty much a doji. You might be able to call it a spinning top. But what do we have happening? Well, the movement's below the two-day trend line. Derivative oscillator has continued to heat up about 3 times what it was back on the two-day candle ending on the 26th of August, plus the MACD and the signal line are both continuing to move down. MACD is diverging from the signal line, so more down movement. Market was down 0.21%. Now here's where we're going to get into more interesting territory as we call up the S&P 500. Now remember, the S&P 500 tracks many times very similar to the total market. Why? Because it's 500 of the big stocks on Wall Street. Lots of the volume is there. But what do we see going on? Well, this is where it gets interesting. I started drawing for you the weekly trend line in yellow, and we have the weekly trend line and the two-day trend line intersecting each other. Up until the candle on the 26th, ending on the 26th, we had up movement on our weekly chart. We actually had the chart moving up. That is on the weekly candlesticks. And as we started having the downward movement on the 26th, we were able to then draw a new trend line, a new two-day trend line. Well, the two-day blue line and the yellow weekly line bisected. Now that typically portends down movement, which we have continued to see. But I have found over and over when you have bisecting trend lines between a weekly and a two-day, typically shows you a nice change in trend that's going to last a while. Now we're still on an uptrend as far as the weekly chart goes, simply because we haven't had the MACD cross over the signal line. But as far as price movement goes, that has already turned over. We shall continue to watch. We do not call it a change yet on the weekly chart, but it is important. Those of you who jumped into down moves, of course, have been doing well with that. Let's look at the 4-hour chart, see what it did over the course of the day. The 4-hour chart has been going down on the 4-hour chart's been going down since it crossed over going down all the way back in the afternoon on the 16th. Started to cross back over going up, it looked like on the 23rd. These are all August dates, and then rolled back over. And what we have had happen is, again, we've had that penetration of the price through the two-day trend line and the weekly trend line. And of course, we saw some down movement in the morning, basically a doji really in the morning, not a lot between the opening and the close, but then down movement in the afternoon on Tuesday. So we are in a confirmed down move on both the weekly and, the two-day and the 4-hour charts. All right, it's been a long day. Now let's go back to the two-day chart. And we're going to then go and we're going to see the same kind of setup on the Qs. What do we see happening in the Qs? Happened a little later, but the Qs, of course, we had a weekly uptrend and we saw also a crossover between the two-day chart and the weekly trend lines. That has occurred with the crossover going down on the 26th of August. So happened a little bit later as far as when the crossover occurred on the MACD and the signal line on the Qs, because the Qs just continue to barrel up, up, up. But it also has showed significant signs of weakening. For the record, the Qs was down 0.32% for the day. The S&P 500 0.16. So the Qs was literally 2 times more down for the day than the S&P 500 was. If we look at what happened intraday, we of course see that we're below the 2-day trend line, and we had down movement in the morning and about the same amount of down movement in the afternoon, confirmed down moves on the Q since it crossed over going down all the way back on the morning of the 10th of August. So again, we have confirmed down moves on both our 2-day and our 4-hour chart. Those of you who jumped in, you jumped in, of course, when after we saw the backup occur and then the movement over happen. Now, if you're waiting to be careful and you really want to see the MACD backup, which is what we feel safest with, you can keep waiting if indeed that does occur. Again, we don't call that until we actually see it. If you want to know exactly what we're talking about here on the broadcast, please sign up for our newsletter at chartingwealth.com. Guess what we'll do? We'll send you a link to our 15-minute How to Read a Stock Chart video, which is all you need in order to start figuring this out. We keep it simple. Nothing we talk about is super complicated. So much of what we have developed is through trial and error. The market does change, and we try to change with it. We try to modify and move with the market. Our job is to guess where the market's going. Because when you're able to do that accurately, and I guess guess is not a good word to use, we want to come up with the probable movement of the market, whether it's up, down, or sideways. And really think about it. That's all you've got to do. Charts can help you figure out what's happening with a particular index or a commodity like gold. And if you can do that accurately, you can make money whether it's up or down. Why? Because they're inverse funds, such as with the Qs. There's QID, which is a double inverse fund. So when the Qs goes down, like it is going down over the course of the last few days, since we saw the market rocket over heading down on the 24th, what are you able to do? Well, if you go into an inverse fund for the short term, you can actually make money. You can short that index. You can make money when it goes down. Now, again, we're not a stock calling service. We ask you to join us every day and learn. We ask you to open up a virtual trading account. We do not give stock trading advice. We're not a stock calling service. We do not pretend to be. We're an education firm. We want you to practice. And when you get good, you can make up your own mind when you develop your own trading techniques, things that you have tried over and over again that you feel comfortable with and that work when you've developed your own skill set. We're just trying to help you get some of those skills. Now, lastly, we're going to go back to our 2-day chart, and we're going to look at gold, which was down 1.01%. It was down the most. And what do we have? Of course, we've got a nice down trend line. Actually, we have 4 candles, but 3 connected on a down trend. We crossed over going down in gold back on the 8th on our 2-day candles. And if we look at our 4-hour chart, what do we see? Well, it crossed over going down after a backup on the 19th. Those of you who jumped in, the low was 127.86. Where was the market when it closed at the end of the day on Tuesday the 30th? Well, the last was 125.34. Now, again, if you were in an inverse gold fund, not bad at all. So, again, follow us every day. Learn how this works. Practice with us. If you want to help us out, we would appreciate you going to Charting Wealth's YouTube channel and becoming one of our friends there. Please go ahead and help us out by subscribing. Once we hit 1,000 subscribers, we will be able to bring you proprietary broadcasts, and they will go out, of course, to those subscribers. I know we have thousands listen every week, but once we hit 1,000, YouTube gives us the ability to do proprietary broadcasts. Also, we would appreciate it if you would go to iTunes and sign up for our podcast. and give us a 5-star rating. We really appreciate that. It helps us with the metrics. You guys have made us as popular as number 6 as far as stock market podcasts go in the past. Thank you so much for that. Please continue to help us out. You have questions, problems, concerns, we'd love to hear from you at Charting Wealth. Also, go there, sign up for our newsletter. You'll receive links to our daily market worksheet, how to read a stock chart video, and the layout that we offer free from freestockcharts.com. Thank you so much from chartingwealth.com.